Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HOMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey guys, welcome everybody. Welcome to Stock Sniper Trading. My name is Ronnie, my partner is Dave. Welcome guys, welcome everybody. Good afternoon. Welcome everybody on Zoom. Welcome everybody on YouTube. Thanks for joining. Guys, this is a bonus FOMC session for you guys on YouTube. So please remember to hit the like button, subscribe, and notifications. We normally don't do this. Normally all of our FOMCs are private, but today we decided we're going to give back and give you guys walk you guys through FOMC, so hopefully you guys don't do anything silly, because we really respect you guys as well too, just like everyone in the Zoom. Okay, so guys, I'm a little bit under the weather. I just mentioned it to everybody in the Zoom. I have a really high fever right now, but we're gonna get through this. Okay, so thanks guys in the Zoom for being patient with me. I've been really sick the last couple days. I'm trying to get over this nasty cold, but I'm fighting through it. So we're gonna get into FOMC. So first of all, if this is your first FOMC or you have no idea what I'm talking about, this is a very critical time in the markets. It's today at 2 p.m. in one more hour. We're only going to look at 3 charts. I even think 3 charts is a lot, but what we're going to do is we're going to look at Dow Jones, US 30, we'll look at NASDAQ, and we'll look at gold. And that's it. That's all we're going to look at. Okay, so don't ask for anything else, because this is more than enough for FOMC. So we're going to look at 2 indices and gold. And you guys pick which chart you guys want to trade. trade, I'll have all three charts. Unfortunately, at this time, we're having some difficulty with Bookmap. I can't get the connection. I've contacted their support for the past 30 minutes and I haven't got a response from them. So it's under my control. It's not under my control. So I don't have Bookmap. Normally I have Bookmap on here. It just I can't get the connection feed. We're under tornado watch over here, and there's a big storm brewing. So I hope that my internet holds up during this FOMC. So if you're asking about Bookmap, unfortunately, I have no connection to Bookmap currently, so there's nothing I can do about that. So guys, welcome, and let's get started because we have 1 hour. That's it, and then it's going to start. So I want to get through 3 charts of top-down analysis. I'm going to start off with US 30. Okay, can everybody see 3 charts? I just want to make sure before I move on. Can everybody see 3 charts? You should see US 30, Nasdaq, and XAU USD Gold. Okay, awesome. So we can see that. Normally I have Bookmap over here, and we're looking at 2 charts, but I just explained about Bookmap. So let's get started, guys, with US 30. Okay, so and you can pick whichever security you would like to trade, either Dow, Nasdaq, or gold. We'll be looking at all 3 of them, but I'm going to run through a quicker top down than I normally do because I really want to get this done and explain what is FOMC, and so we're all ready. And one thing that I can tell you is do not over leverage, do not gamble FOMC. It's going to be very erratic. It's going to be very volatile. If this is your first time or you know how it moves, do not over leverage. Don't gamble. Don't risk. You don't need to. There's going to be better trading after FOMC. It goes into power hour, Asian session. Tomorrow there's going to be opportunities. This is just if you're comfortable with trading high volatile news, you know how to trade it, or you're learning, that's what we're here for. But if you want to over leverage and gamble, that's on you. Okay, so I just want to point that out here. I'm not a financial advisor. I'm not claiming to be a financial advisor. I'm just Ronnie, trading just like you guys. I'm here for entertainment, education. Okay, you have to manage your own risk. You are essentially your own banker. You manage your own money. You manage your own account. If you want to over leverage, that's on you. You need to deal with the consequences. Yes, you can make a lot of pips, or you can lose a lot of pips. That's up to you to decide what you want to do with that. Okay, and most retail traders have difficulty trading FOMC, and this is when they normally lose a lot or blow up accounts, not just by taking the wrong position, but also there's so much variables. Spreads increase, there's slippage involved, there's lots of other outside factors, not just hitting a buy sell button that can affect your profits or your losses. Okay, so there's a lot going on here. Okay, so let's get started with US 30. This candle right over here, Friday, June 2nd, was NFP, the first Friday of the month. We retraced 50% the next couple of days, and since then, it's been making higher highs and higher lows, all the way up to yesterday, where we kind of pushed. Look, it took out even this high right over here, if you guys were following what's going on to the left, and we're coming up to these previous wicks over here. So we took out the high, they gapped it down, we came back up today, lower high, and then it pushed down for almost an equal bottom from the previous day, and we're coming right back up, leading into FOMC. So this daily candle has some indecision. It's basically almost like a 50-50 neutral candle. We gapped down, we opened, we came up for the high. So I'm going to place this as a purple line up here to let us know where the high is. 34,196, 34,200. And since then, we came down, we made our low of the day, which is pretty much an equal low of yesterday. So if I place a purple line right here, it's very identical to yesterday's low, 34,008, that 34,000 psychological number. And when we came down there today, we bounced off, and this is where the volume is right now. So I'm going to place a yellow line at maybe the halfway point of yesterday's green candle, and also where we opened today, I'm going to place a yellow line. Lisu, you don't have to give us a donation, but I honestly, we really do appreciate it. All the proceeds go into growing the channel, but I feel more comfortable if you keep that money in your pocket and use it to grow your account. But Lisu, I thank you so much for doing that. That's amazing, but that's not what we're here for. Just please use that money to grow your account, but respect and thank you for that. All proceeds go towards the channel to grow it. We're growing this organically, so much respect. Thank you for that, guys. Shout outs to Lisu Deru for that donation to the channel. That's amazing. Thank you, bro. I really do appreciate that, but you don't need to do that. Thank you. So I'm placing this yellow line right here at halfway of this green candle, and that's where we are right now. Like this area, 34,127, 34,080. This is going to fluctuate. This is going to move. So I just want to place one more yellow line, maybe down where we opened yesterday, because that's a critical body. So I'm placing a yellow line right here, because we may come back down and tap this yellow line and see how we react here. If we come down bearish and we come back down to the low of the day and we break, we're probably going to come down to this wick, but maybe a little bit further down with some pressure of FOMC, maybe half of this green candle. Here to here, where's halfway? Probably right around here, near this wick. So we're going to kind of judge where's halfway, like right there, and I'm going to place like a green box like right around here, just in case it dips down there, just to give us a heads up that if it's coming down here, the volume, and it comes into this green box, it could get rejected and come back up during FOMC. If it does break, we might have that impulse break and then come down to critical body, and a wick over here. Sorry guys if I'm talking fast. But I really want to get through this. So if you guys have been here for a while and you guys understand what I'm doing, maybe you guys can get this a little bit faster than others. And then now when I'm looking at the imbalance in the market, this big red candle, this big green candle, half of it is currently like right around there. If I want to go down and find where that wick is, I can. But if I want to keep it kind of consistent in case there's like an impulse move, I want to go 50% here, half and half of this yellow tape to that yellow tape, there's half. So if we break this green box, it might come down to here, to this yellow line, and maybe bounce. That could be an impulse daily move that breaks and it goes back up, okay? So that's for downside momentum, okay? And if we continue dropping, maybe down to body, 33,800, down in there. What happens if we make a bullish move? Okay, FOMC, we have a move where the market starts to continue to push up. Maybe we come up to the high day, and if we break out, okay, we've got a lot of a rejection wick right there, rejection wick yesterday, but we do have some critical bodies like right in here. So those critical bodies, I'm placing a yellow line at 34,234, and if it continues to push up, maybe see all of these wicks. There's 1, 2, 3, like 4 in here, a lot of wicks, but I'm going to go a little higher to the body. To that body, just in case with more momentum of FOMC, it's going to break and impulsively break above those wicks, maybe right up to there. And then what I want to do with our weekly high, 34,300, I'm going to place a big red box, catch yesterday's wick, and bring a red box across. Just so I know if anything is coming up here today, tomorrow, next week, I have to know that this is where it got heavily rejected there. And then above us, if we impulsively break out, there's our wicks above us. It could break out right there, 34,350. See how nice and psychological that area is? We will get to gold. We will get to gold, Elisa. Just be patient, guys. Be patient. You're not gonna be a successful trader if you have no patience. I said from the beginning of the call, we're looking at 3 securities: US 30, Nasdaq, and gold. One by one, we will get there. Patience, guys. Patience. If you don't have patience for 30 minutes for me to chart, you're not gonna have patience to trade these markets daily. Just relax, guys. We'll get there. Okay, one chart at a time. Understand what I'm doing. If you follow what I'm doing right here, Elisa, you could do the same charting on gold and you could already have your gold chart done by now. Okay? Just understand what I'm doing. It doesn't matter what security I'm trading. If I didn't tell you what security we were on right now, you would have no idea. All we're looking at is the candlesticks. Please learn what I'm doing here, guys. I'm not trying to waste your time. I'm trying to help you guys. But you guys got to learn what's going on here, not just ask for a gold chart. Learn what I'm doing here. Then you can do this yourself with gold chart. Okay, so guys, do you guys follow what I just did there? Okay, this is what I mean. Sometimes we waste time. Do you guys follow what I'm doing here? Okay, because now I'm moving now to the 1 hour time frames. So if you guys have no idea what I just did there, then we know what we need to work on. You need to work on your daily top-down analysis. Now I'm moving into the hours now. So these are 60 minutes. Now I have all my daily levels. Now I can watch what happened with the hourly candles right here. So right here, this time and date. Tuesday at this time, you see where they dipped the market down, kind of consolidated across here. It came back up. This is London. Okay, you're 3 a.m., 4 a.m., 5 a.m. coming back down. Wednesday, today, here's your big Wall Street move. Okay, it came down, came back up. This is where we are. So look at the hourly candles. Red, green, red, green. We're consolidating in between these critical daily levels right here. So if we want, we can trap this entire area and we can watch today. FOMC is going to break out above this wick. So there's our hourly resistance. If it breaks out 34,150, and you see how it's 50% of the previous red candle right here. Okay, this was at 7 a.m. today. It came back up, rejected, came back up, came back up. Look, it tapped half of that. Okay, so let's make that a white line. What time do we got? 1:10. Okay, so it's a white line right here, and then there's where we got rejected. So now I know where my upper hourly resting supply is in the market. It's at the purple line. It's at the daily high up there. Okay, so that's hourly resistance in the market. They've actually lowered it. Okay, you see how we're getting rejected down here. So the market is slowly pushing down. We can do an hourly trend line starting from over here. If we connect it like this, we can see we're still trending down. It made this lower low, but it's kind of almost equal to Tuesday 8 a.m. move, and we came back up. Okay, so these are the hourly candles we're pushing down right now. We're going to see if we can continue to come down into this big green box here. That's that daily. That could be the impulse down to that yellow line, and then here's our next area that we could hold in here. Okay, so let's go now to the 5 minutes. Okay, so this is now our 5-minute structure. How we came multiple times in this bigger area of supply, got rejected there. There's the double top, got rejected. There's another top coming in there, lower high. Then they reject it hard. We're coming back up again. They rejected 2 times here, continuing to push down, comes back up. Look, it can't break and close above this daily area. Continue, come back down. We're picking up volume there. There's the double bottom coming right back up. They broke out this high, came up, but couldn't break that upper hourly, and now we're pushing right back down like an M pattern, coming, breaking this support level, coming back down. So this area we really have to watch and see, are we going to get some volume closing below here? Okay, so I'm going to do like just a temporary green box just to let us know that we had that big impulse move come down, couple moves, no volume closing below here. We might come down now and close below and retest this, and maybe it pushes down to the low of the day, 34,000, and we'll see if it continues push down. But areas over here, okay, so this used to be an area of support here, support there, bring it across. You see now how it's acting as a red box now. It got rejected there. Let's bring this box across too as well, but let's flip the color now red. Okay, so if we come back up and maybe we close above here, maybe we might break this hourly trend line, and maybe it's going to be bullish. Okay, so one area that we're going to watch is above here. Okay, and it could get up here before even FOMC. Okay, so I just want to make you guys understand that this is more of an aggressive zone. Okay, if you want to get in here and you want to play and you want to trade in here, this is more aggressive. Okay, it could come up there for 20 pips, right up to this previous price action. 20 pips, there it is, 2-0, you see it. Okay, and that's the trend line. It could come up 20 pips and get rejected. It could break maybe up to that daily area. It's about 30, 33 pips. If it goes all the way up to the top, you're looking about 50, 60. If this is too aggressive for you, then maybe you wait up here at the daily, okay? Because that's another critical area. See, when we're here, we got rejected, 50% rejected there. So there's your other area of resting supply. So you could play this box in here for 15, 20 pips, maybe 30 if it gets up there, or you can wait patiently up here and wait for a close, and then maybe get that next break to come up to this white line, just like it did here, closed above, retested, right to the white line. If you don't make anything, then it comes back down. Okay, same thing coming up could happen up there. Okay, so one area to watch is here, and the next area is up there. We may consolidate. I'm hoping to see if this can stay inside here, leading into FOMC in here. So I'm going to make this area neutral. And maybe if we break down, it could come down here. But remember, they could pick up bids. Like, that's why I like to have Bookmap on at this time to show us where those bids are. Unfortunately, I cannot get that connection to get it started today. I'm not sure why. Okay, so it could come down there too. Okay, it could also be a red candle that impulsively breaks down here, just like this right here. This at 9:30 Wall Street was a red candle that came all the way down here and then picked up that wick, and then it went up. So same thing here. It could be a red candle that comes down. You got to measure the move so you know what's going on. If it comes down there, that's approximately 30, 40 pips to the purple low, and it could catch a wick and go right back up. If it breaks, maybe 50 pips. If it comes down to the green box, it could be 70, 80 pips down there. But then it comes to the bigger green box. There could be bids in there in the market. Unfortunately, I don't have Bookmap to kind of show us that. Okay, what is the overall move? Okay, we are bearish, making new lows, lower high, new low. That one kind of broke this break of structure right here, but couldn't break the hourly. So continue, we're coming down here. Okay, so we're going to leave it like this for US 30. This is the Dow Jones. Make sure you look at your spreads, everything, how it's moving right now, because I guarantee you when the spreads start up during the FOMC, they're gonna really fluctuate. Okay, so that's US 30. Let's move over to Nasdaq because it's 115, guys. We got to get these done. Okay, so Nasdaq, how is it moving? Remember, this is a completely different index from Dow Jones. Okay, so this is tech. Look at it on the daily. Okay, so we are in a complete uptrend, weekly, monthly, moving up, higher highs, higher lows, higher highs, higher lows, higher high right there, higher low. This big bullish candle Monday to start the week. We continued Tuesday, Wednesday, broke a new high, come down 50% of that, and still moving. If we look at the RSI, yes, we are completely overbought up here. 3 times, came up to 77, another time, okay? And it's still moving. So if you're a short seller and you're holding these trades, you could be having a bad time in the markets, okay? They keep driving it up. There's our high of the day, 15,015. Okay, we cracked 15,000. That's our high of the day. Our low is right here, approximately 50% of yesterday's volume at 14,865. Okay, and where's our other critical area right now? Right, maybe at yesterday's high, 14,950. Again, nice psychological numbers in the markets right here. Yellow. Okay, and we have a spin top kind of candle indecision today. We opened green, we came up the high of the day, got rejected, we came down here, picked up bidders, and the volume is right here again, almost where we opened. Okay, so if we keep pushing up, maybe we will attempt our high of the day. And if there's a break, I only have a black chart up there, so let's go to the left of the chart. What do we have above purple? There's an impulse break right there. We can see the time and date exactly when that occurred. Okay, so that could be a breakout to 15,057. That could be like an impulse break too of the daily and get rejected there, or maybe continuing to squeeze shorts and continuing to go bullish. If we keep moving, okay, I have another critical body right there at 15,103, and you can see those are about 50 pip moves from yellow to yellow tape. 50 pips. So for scalpers, it's nice for us, but if you're looking for bigger moves, you need to break this area, break this, and break this, 15,170, and then you guys might be moving up into here. But where's the big supply in the market? Right here. Okay, you see how this area used to be holding as demand right there? Bring it over. That big wick got rejected in this box. I would have flipped it red, continue with red, came right into that red box, got rejected there. So I'm going to continue to bring this box across, and maybe it comes in there and it's going to be a red rejection. Unless it continues to cut through here and we break out of here, then the impulse move could be coming up right up to these previous wicks. Okay, 15,355. That's if we have a bullish market. Like for example, if we'll talk about FOMC, but if they were to decrease the rates, okay, out of nowhere, they say we're going to decrease 0.25%, then we'll probably have a big rally in the stock market. But that's where to get those type of moves, they would have to do something drastic, like decrease the rates, and then maybe continue to get a rally up there. But maybe it's going to push down. Okay, we know we're completely overbought on the daily, so maybe it's gonna spike to the high a little bit, grab some liquidity, and then they dump the market down. So if we come back down to maybe our low of the day, but before we get there, maybe we want to mark where we kind of opened today, right in here, or the close of the open of yesterday, right in there. I'm going to place a yellow line just in case we come down here and they play around a little bit down in here. Okay, so now you see how I trapped the volume in between here now on the daily. If it breaks this yellow line, we may come down to our low of the day, and if it breaks, maybe we come down to where this body is, where it opened before the gap down. Sorry, the close, before they gapped it down. No, I don't want that. That would have been a nice TP. I want this line right over here. Okay, so yellow for daily. And then look at this, like the wicks tell you, there's 50%. I don't need to look at the wicks, but there's 50% of the candle. From there to there, there's about half of it. And look at the wicks you get, okay? So even these wicks got rejected right here. And there is half of this big bullish candle that started this move. So this would have been resistance, resistance, resistance. Now we're closed above it, so I'm going to make this area a green box on the daily, just in case it comes down there. We have to have heads up here that it could come down, hold here, and continue to go back up. But it will take a while to get down here. Okay, we're up here. So it's got to come down first for the purple, then this yellow, then continue to break. Maybe half of this zone from yellow to this green box. There's about half of it right there. Okay, but if we look to the left of the chart, in between yellow and yellow, maybe we'll find our own critical bodies right there. Okay, see how I have a body to body and a nice rejection wick at that area. It's a little lower than half, but this is price action. If you're looking at price action right there. And then what I could also do is draw another box from right here, that gap, okay, fair value gap, whatever you guys call it these days, right there. Okay, that's another resting area of demand. This one might be more active, and this one is resting down there. Like if we had Bookmap, maybe we would be able to see these. Okay, unfortunately, the Bookmap connection, and if Bookmap is listening, please message me. I would like to get my connection back with Bookmap. Okay, Bruce, if you're listening, buddy, I need this. Okay, not sure what happened, why it lost connection here. So the daily, okay, we opened up, came up here, came down. This is where it is right now. Let's go into the hourly now, okay? Also, if you want to draw red boxes above, okay? Remember this big red box, okay? So see where it is now? I'm now bringing it into kind of like the future. So I'm making my own resting area of supply. Just like if we had Bookmap, maybe we would see a ton of orders, a heat up here. We're not there yet, but we would maybe see it. I'm looking over here too. See where the market came up and got rejected right here? Okay, so maybe I'm going to draw a red box right kind of in this area because it used to be green right there. There was green. Flip it over, there's red. Continue to bring it over where we are now. Maybe I'm going to make it red as another resting area of supply that could be very active very, very soon. Okay, and now let's move to the hourly. Break this down. Let's see how the hourly candles are moving. These are 60 minutes. They're in an uptrend. Okay, higher highs, higher lows, higher highs. Okay, are they getting overbought? Yeah, well, there's huge divergence. Okay, we're continuing to make highs, and look at the divergence. Okay, coming down. But this could be this big red candle that's coming down before FOMC, and it could go right back up. So let's mark our hourly critical bodies right here. Okay, look at the volume here. Let's place a white line right there. You got it rejected there. There's the volume body below. There's a close. There's an opened ignited red candle continuing to push down. So if we get volume to maybe come back up and close above this white line on the 5 minutes and retest it, maybe we'll come back up to fill the high of the day, maybe up to this red box. Maybe we're going to continue to push down. Now where's our hourly support? 50% of this big bullish candle. Look at how the volume held right there. Held. It's still holding, but we may be walking right into this very, very soon. There was just this impulse break right here when at Wall Street open 9 a.m. 9:30. This is an hourly candle, came down there, picked up the liquidity, made the low of the day, and since then it's been driving up where we're coming right back down. Okay, we can do like an hourly trend line in the market if you want to see how it's holding trend, like from this wick, kind of catch the bodies if you can. I like to catch the body. Keep it consistent, going right up. So I see this was an impulse break, come back up, close here. We're going to see if we close with volume below here, break the hourly trend line, and maybe trickle down into here. Okay, so we have a bearish hourly candle right now. Let's go into the 5 minutes. Okay, so these are our 5 minutes. This is what we're going to be watching going into FOMC. So our 5-minute candles came up to the high of the day, continue push down, bounce, lower high, come back down. Finally now just broke its lower low, continue to come back down. So what I'm gonna do is maybe I'm gonna try and box. I'll fix up US 32 going into FOMC, but maybe we box this entire area, okay, because it's gonna get really volatile in here. We'll watch maybe is it going to push above here and maybe come take out the daily high and up here and get rejected? If it is, okay, we could be watching for a move to break out of here. And if you're measuring that move, like to break out from here and to come up to that purple, that's about 30, 35 pips for NASDAQ, maybe 40. If it breaks a little bit more, 50, and then 60, 70 is the big red box. And that's where it could come up, catch a wick, and go right back down. So you have to be aware of what can happen. Okay, so maybe we'll see something break out of there. That could be like a TP up to there. But even halfway, okay, even for scalpers, sometimes scalpers going halfway, about 15, 20 pips right up there. Because I'm looking at these bodies right over there. There's 20 pips to come right up to these bodies. There's no guarantee that it's going to go for the high of the day and break out. But if it does, it could be the move. And then maybe come up to there, okay? That's more of an extended move up there. What about if we just trade sideways? Maybe we trade in here, we watch what's going on, and then they continue to break it down. Let's say it's, let's say for example, they increase interest rates like what Canada did last week. They increase 1/4%. What happens if America increases another 1/4%? I don't think that's going to be too good for the markets. So maybe we sell off. Maybe we break here, we come down again, we test our low of the day. There might be a little bit of a bounce, but maybe into a lower high, and maybe they continue to push it down to this daily, and maybe down to this big green box down in here. And they could just pause. Remember, they might just do nothing. They might just keep it how it is. And we'll see how the market reacts to that. Okay, so coming down there, purple line could be a TP. And then if it breaks, continue further, coming all the way down there. But you got to remember, the market came down here today and it bounced bullish. So I'm just going to draw. And look at how many times it held here. It held right there. It didn't really break below that purple line. There it broke today, but it went right back up. So we got to be aware. If it comes in there, could be a little bit of a bounce there. If you're measuring that move, always measure. Just like a construction worker, how they have their tool belt here, you as a trader should have your tool belt with all of your tools. If it comes down there, you're looking at right there. You can read it off my chart, 37.6 pips. That's on this chart. Remember, slippage is involved, spreads are involved. Yeah, the zone here shows 37, but the actual TP might be 20, 25, 30 pips, depending how your broker executes on news. Okay, so if you don't feel comfortable trading news, don't trade the news. That's all I'm saying. Okay, you can trade after. This is just for if you know how to trade news and you understand. There could be ranging candles. It could open up, come all the way up here, go all the way down here. Like, you're going to understand the range is going to open. So if you're in trades leading into FOMC, you have to be fully aware of that. I don't go into trades before FOMC unless I'm speculating something really small with 10 cents. Other than that, I'm not in any trades. I'm not in any trades right now, and I don't intend to taking any trades until FOMC. So let's do gold now. For all of everybody on gold, okay? Here it is. Hit the like button, guys, for gold. Let's look at what gold is doing. Okay, do we want to just start right now in the 5 minutes? No. So I'm going to go to the daily. And it's almost 1:30 right now. Okay, so a new 30-minute candle is going to open in the market in just a few minutes here. If you are trading, okay, just be aware that we're going to get some volatility. So gold has been trading sideways. Look, if you are a daily trader and you boxed all of this in, you have a daily trapping gap. There's your daily trapping gap for gold right there. Okay, how big of a zone is it? Look right there, 1940 up to 1985, 1940 to 85. That's $45 move, 450 pips. Okay, that's if you're trading daily candles, but we're still consolidating. Okay, it's not really, did we see any breakout from here? No. Did we see a breakdown from here? No. Just a quick little impulse here and there, but maybe we'll see something with FOMC. Right now we have a bullish daily candle continuing to push up. Okay, so what are we following? We're following bar coding. Red, green, red, green. Okay, so not the greatest to be trading. If you go lower time frame, yeah, there's a lot of trades to be made, but on the daily, we don't really see anything going on. Just trading sideways. Okay, so but what we can do is we can figure out today's high of the day is 1960, purple line. Okay, so remember when you guys were asking for gold and I was showing you how to do top down on US 30? See the same thing now? That's why you want to learn. Look at what I'm doing with gold. Same thing I do with US 30, same thing I did with NASDAQ. Okay, the low of the day is 1942. Look across the board how it's been holding 1942 pretty steady. Yeah, there was some minor breaks, but continued to go right back up. And here's the volume. We opened, came up here, we opened. What did they do? They gapped it down. We opened down here. I'm sorry, guys. 1942, we opened. There's no break to the low, okay? So it's a higher low, and we continue to push up to the high, 1960, and we're retracing now, 1955. Remember, the psychological area of gold is approximately 1950, okay? So psychological levels are 1950. I can place a yellow line at 1950, but what I'm going to do is I see a wick there. I have a critical wick right there, and you see how it lines up with another wick right there. So I'm going to place this yellow. I'm also going to place a green box like right around here. Okay, 1949, maybe a little bit above 1950. Okay, maybe 1951, a little bit below, but just keep a green box there just in case we come down there, just so we know that maybe it's going to come down halfway of today's volume and might pump up again. But we're going to also watch if we come up to our high of the day, 1960. Look if we break out. Okay, critical bodies right over here, 1965. That's $5 move, 50 pips. Okay, right up to there, yellow line. Have we closed above here? No. Broke out, rejected, broke out, rejected, broke out, rejected, broke out, rejected. Where is it coming up to? Into what's left of the body right here to the yellow line, half of it right there. Okay, so I'm going to draw a red box right here and bring it across. Bring it across, bring it across, bring it across. Right there. Red box. Sorry. Okay, so where's the red box? 1973, 1970. We've came up multiple times and got rejected at every single time. And so if we come back up there, maybe we get rejected. Maybe it pushes down. If it impulsively breaks out of here, then it can break up to these bodies, 1977 or 78, right there. And then we got, look at all these top wicks. Two up there, another one up there, another one up there. That's maybe where they'll maybe cap it, 1985 up there. If it has momentum to get up there, maybe, who knows, maybe gold is pumping and it breaks right out of there. We'll see. But look at the support it's holding also below here. Okay, so if it gets rejected and we're coming down, we can't hold 50% of this body or this green box, maybe it will come down, back down, test 1943, 45 area, break our psychological 1950. But over here, look at how long it's been holding. We didn't really have any critical breaks below like this area right here, these bodies. I like to stay near the bodies. It held there yesterday, little impulse there, impulse came back up, impulse came back up. So below here, we have to know that there is bids here. There have been bids all the way down to 1930. Okay, I'm going to just bring it up a little higher, like right there, 1936, keep it as a green box. And if there's an impulse break right there to the wick to 1932. And then that's the only thing holding gold up right now is 1932. If 1932 cannot hold, then we're dropping. Then you're going to see gold start coming into this area. 1920, let me see those bodies right there. 1925. Right there, those bodies. And if it can't hold 1925, then gold is coming down to 1920, 1918 area right there. That's good enough. What are we doing on the daily? Just accumulating, okay? Red, sellers are accumulating. Green, buyers are accumulating. 3 red days, sellers are accumulating. Today, buyers are accumulating. We're in an area of consolidation. What's the overall move of gold? It's bearish. Okay, so this is technically a bearish flag. It could have a high probability of continuing to break down. That could be false. Okay, we could be breaking out, maybe take out some highs. They maybe grab more liquidity coming up to 2,000, and then they dump it. Okay, what happens if we see a move like this, where it comes, breaks through here, breaks this big area? Half of this red candle right here on May 16 is 2,000, exactly 2,000. Let's say they come up, take out all, they sweep all the highs, they take out all the pending orders up to 2,000, and then they dump gold back down into here. That's a possible path. That could happen. You know, if that happens, we got to be ready. We got to be aware of it. So just for kicks, I'm going to place a yellow line at 2,000 right there. Why right there? Because it's, no, I don't want that. I want my line right here. Why at 2,000? Because this is a critical area. It's kind of half of this big red candle. There's a rejection wick. If there's a lot of liquidity up here waiting, pending orders, maybe that's their intentions, what they want to do. Come up here, take out the highs, grab that liquidity, then sell it off. Okay, because there's, both parties are accumulating gold here, but we'll see who breaks it out. Okay, so that's daily. I'm going to go into the hourly now, 1H. Okay, so this is how we're moving now. So we dumped over here. Okay, Tuesday, we've had CPI, PPI last few days. Okay, so it kind of affected gold. We came down here, but then they kind of picked it right back up. So you see the support we're making on the hourly. Where is it? It's kind of where this big bullish candle started, maybe half of it. So you should have a hourly line, maybe a white line, letting us know that this is an area where support is in the market for the hourly. We came back down, back up yesterday for London. We came back down today. PPI, big bullish move coming out at 8:30 Colmex market. And how have we been trading on gold? Just consolidating in between here. Again, green, red, red is pushing it back down. So where could we push down to? Let's find where critical hourly levels are of support. Right here. I'm going to place a white line here because look at here. Wicks holding. Here, look at the rejection when it closed below perfectly right at the white line, and look at when we came up here to the white line and got rejected. So maybe this white line is going to hold some hourly support in here. It might come down, maybe bounce back up. If it does, we've got hourly resistance in this area here too, 1957. So I'm going to place an hourly white line right here and see how this thing is moving. Okay, there is a trend coming up from the bottom over here. Okay, but you see where we're getting rejected. Rejected here, rejected here, rejected here, rejected here. So we're getting a lot of offers here. So let's go to the 5 minutes. Let's take a look at how gold is moving on the fives. Look at how choppy it is, okay? So even if you're trading this, there's no real direction unless you're pipping and dipping out of this market real quick. But what we're going to do is, I think we should box the hourly range. And then we'll see how it moves out of here. Unless you want to do some scalping inside, okay? You can, absolutely you can. But what I would be doing is I would be pipping and dipping if you're going to trade in there. You can start to see where it's creating some 5 minute resistance, like right here. If I was scalping in here, this is what I would be looking at, okay? Let me see if I can do this real quick. Like in here, okay, you could box that right there. And then if it does break out from here up to the next liquidity, get your ruler, okay? If you want to scalp, we can scalp, no problem. From here to there, up to this next block of liquid, 15 pips. If it makes it to the high, there's 20, and then if it can break out, maybe 30, 35, okay? If you really want to keep it real tight, you could catch that break. It's maybe making a double bottom right now where it came down. There's the neckline coming back down. Maybe if it gets bullish, might break out of here. It might get you 15, 20, 30 pips, okay, to get started, like an appetizer, or to follow the move. The bigger move will be like kind of maybe above these areas because we're getting close to the hourly, breaking out for the daily. Here it could get to the hourly support and then come down to this big green box, okay? So there's everybody is different, okay? So you got to know what you're kind of looking for. So like you could look for a quick buy up there. You could, but remember, there's going to be a ton of fake outs when FOMC starts, but some traders want to get in early and take that move up to there. Okay, you know, that's possible path where it could go up there. If that's too aggressive for you, then what you can do is try and wait up there, and not always just impulse, but we need volume. Where is it going to close and things like that, okay? So I'll leave it here for now, or here, but you guys decide what you want to do in there, okay? It could continue to push down and break from here and go back up and retest and drop down in here. If that's the case, okay, some aggressive scalpers want to scalp down in here. Kind of take it right there, but again, if you want to wait below there, wait below there. And then when you're coming into a green box, it could come in here and bounce right back up, okay? But unless it's coming down with huge FOMC pressure, it could cut right through this, okay? So we will watch gold as well, okay? Gold is slowly trending down from over here. I could even do it maybe more over here. We are descending right now. It is coming down, but we could possibly break this. And you know what I mean? When you're looking for a quick little scalp right there, that's what I mean. Little trend break, a retest, and maybe come up to there, net you 15, 20, 30 pips. But with FOMC, maybe we should be waiting up here, okay? So that's gold. What time we got? 1:40. Okay, we're good for time, guys. Sorry I talk so fast here, but I kind of want to get 3 charts in for all of us. Guys, if you're on YouTube, please hit the like button. This is a bonus session for you guys. Normally, we are in our Zoom right now. It's private. We do this, but we thought let's do a FOMC with you guys because to help you guys educate how fast these markets move. So just all we ask from you guys is just a like button, subscribe, notifications, things like that. So thank you for that. Okay, guys, are we okay with what I got right now? Okay, and then I'm going to now talk about what FOMC is and explain what that is. Okay, so we all have that. Guys, I'll give you guys these charts in the Zoom. 1 second, all three of them. We're going to go till 3 o'clock. That's all I have. So what we're going to watch is FOMC open, 2 p.m. 2:30 is volatility as well. We'll explain that. That's when Powell comes to the podium. Okay, this is when they have their conference talk and questions. So the market will change again at 2:30. Then we go into power hour. So there's going to be a lot of volatility for the next 2 hours, guys. So please trade careful. There's going to be people that blow up accounts. There's going to be people that make a ton of pips, and there's going to be some people that have no idea what's going on. That's just how it is, you know. So whether you're trading with SST or you're trading by yourself, the same volatility is going to happen in the market. So some people are going to lose money on their own. Some people are going to make money. Some people, again, will have no idea what's going on. So again, at the end of the day, you are in charge of your account. Nobody is here. I don't rely on you guys to trade my account. I trade my account. You guys should be trading yours. We give analysis and help walk you through it. But at the end of the day, you need to decide your lot sizing. So if you're saying, where should I take profit? What lot size should I use? These are basic questions that you should know as a trader. Okay, it's just part of your profession. If you want to do this, you gotta know that. Okay, I'm painting one of my rental properties. I'll just give you an example. I'm painting my rental property. I can paint it no problem. I could go there and get it done. I just don't have the time to do it. So I had to call someone, a painter, and he's giving me a quote on the job. I don't ask him how much does he buy his paint for if he has maybe he's got a contract code with a paint shop, and I don't ask him what his deals are and things like that. That's none of my business. That's part of him. He gives me a final price at the end of the day. If I'm good with the price that he charges, I will pay him, and that's how a trade is done. Same thing with trading here. We're doing trades, but you need to decide as like a contractor or a trader how much lots you want to use when you're trading, and then that will tell you how much money you can make at the end of the day. And if you have $1,000 account, obviously you're not going to make $10,000 unless you're leveraging the entire account and you're going all in, but you need to make a certain percentage of your account. We recommend 0.5%, 1% per day. If you can do that consistently, you could do really, really well as a trader. Yes, it starts small, but then once you get the hang of it, your account will grow. GU, I'm sorry, we will not be looking at Forex today. This is more than enough, okay? US 30, NASDAQ, and XAU USD, that's it. We're not looking at GU, not looking at GJ, not looking at EU, not looking at Bitcoin, not looking at anything else. This is more than enough to focus on. There's enough for everybody to trade here. Now, let's talk about what FOMC is, okay? So number one, okay, so if you go to your Forex Factory or any folder, you should see today, Wednesday, you should see something that says FOMC. How many of you guys have traded FOMC before? Yeah? Is there any first timers here that have no idea what FOMC is or first time? Because we need to really focus on you guys, okay? Because this is going to be extremely volatile, okay? So we've gone through some news today in London. We've gone through core PPI today in 8:30. That's what spiked those big moves there, okay? Now we're coming through here, 2 p.m., okay? So you see that there's a lot of red folders, okay? There's 4 in a row. Now, what is FOMC? Okay, so let's first of all explain what is FOMC. FOMC stands for the Federal Open Market Committee. It is a monetary policy making body of the Federal Reserve System in the United States. They are responsible for setting monetary policy, which involves influencing the interest rates and money supply in the country in order to achieve the goals of maximum employment, stable prices, and moderate long-term interest rates. They meet approximately 8 times per year to discuss and decide on changes to monetary policy. So this event, FOMC, only happens 8 times per year. So this is the one, this is one of the eight times, okay? That's why we tell you this is very, very significant and very important. This doesn't happen every day. This doesn't happen every single month. Only 8 times per year, okay? And they discuss the interest rates, about pausing them, increasing or decreasing them, and that's why they have the conference right after they tell us the numbers. So this is why 2 p.m. we're going to get FOMC economic projections. We're going to get the FOMC statement, and then here, this is an important one, federal funds rate. Right now, you can see the previous was 5.25. Okay, 5.25 was the previous last FOMC. What is their forecast? They're unchanged. Okay, so they're forecasting 5.25, so no change. Okay, but we'll see the actual. So even Canada last week, they had no change as well. But when the actual came out, it was a pivot. Okay, so they increased 0.25%. We were in Canada. We were supposed to pause for a couple months, which they did. So we thought they were going to pause again, and they actually increased. So that was a pivot in the market, and that's what we're going to see today. Is the U.S. Are they going to increase this 0.25% and take it to 5.5? Okay, if they do that, how will that affect the U.S. dollar? Okay, so let's read right here. So Federal Reserve interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight. So these are bank lending rates. Actual greater than forecast is good for currency scheduled 8 times per year. Okay. Why traders care? Short-term interest rates are the paramount factor in currency valuation. Traders look at most other indicators merely to predict how rates will change in the future. So very, very important. This is Powell. So if you know Papa Powell, he's going to speak at 2:30. Okay. Okay, let's read what it says right here. On the heels of a 10-meeting streak of raising interest rates. Okay, so the U.S. on the heels of 10-meeting streak of raising interest rates, the Fed Reserve on Wednesday is expected to take a break and let it cool down. So maybe when they say this, take a break means a pause or maybe a decrease. What happens if we see a decrease? What happens if we see them drop it 0.25%? And then from 5.25 it goes down to 5%. Okay, that's another pivot in the market, and we'll see how the market reacts off of that. Okay, and then we have, after all of that volatility, that's the first 30 minutes of dissecting the numbers. Then we have actually the conference at 2:30. So this is when Powell comes to the podium. He answers questions and gives maybe forward guidance on the decision. So whether they pause, increase, or decrease, he's gonna say why is he doing this, and let everybody know why the decision is to do this. So that will also have implied volatility here at 2:30 p.m. And then once all that is done, maybe the conference is over, the numbers are out, then we go into power hour, then the last hour of trading. So it could, maybe a market pumps and then maybe it retraces right back down in the next hour. Maybe it keeps pumping and squeezing. Maybe it's dumping. We don't know the direction. Okay, so is everyone clear as to what FOMC is? Sorry, it was just a quick 5-minute breakdown, but that's what FOMC is. And that's what we're going to be watching, because it's going to have a big move impact on US 30, which is Dow Jones, big move on NASDAQ, which is tech, and also a big move on gold. Okay. Also, if you're trading GBP USD, Euro USD, GBP JPY, if you're trading oil, if you're trading Bitcoin, everything will be impacted by this. Okay, because this directly affects the US dollar. Okay, so we have approximately 12 more minutes to go, 2 p.m. You follow which chart you're trading, okay? I'll try and give analysis on everything, but it's going to be difficult to trade everything here because these markets move extremely fast. Remember, guys, there could be breakouts, like I'm just saying, for example, you might see something on NASDAQ break up here, big green candle, all of a sudden it gets a wick and comes all the way back down into here, comes down here, catches a wick and goes back in here, and then all of a sudden we're just trading right back in here, okay? But look at how big the zone is. So if you're trying to predict a stop loss, just from here to there, that is 70 pips on NASDAQ. Okay, so if you're thinking of trading this with 10, 15, 20 pip stop loss, with this volatility, you kind of got to nail the direction correctly. Otherwise, you're probably going to get stopped out both ways, unless you're going to have a stop loss of 30, 50, or 70 pips, okay? So you got to remember, and these can be very erratic. They can be just like spin top candles where they open, they take out the liquidity up there, then they come back down, take a liquidity, and then all of a sudden maybe we might be closing that 5 minutes right inside here again. Unless we start to see a move pushing through here, closing, retesting this, continue highs. Maybe if we see some type of trend that they're moving, we can maybe move with it. But sometimes for the first 5, 10, 15 minutes, 30 minutes, there's no direction. It's just either you're pipping and dipping, or you're just speculating, or you're sitting beside the sidelines and you're watching. If you're testing anything, I recommend the smallest size possible, 10 cents. If you have the account to hold 10-cent trades, because if someone's trading with $100 or $200, 10 cents are a lot for you. It's a game of percentages. But someone who's trading with maybe a prop firm of 50,000, 100,000, 200,000, 10 cents are insignificant, okay? But still, if it goes 70 pips at 10 cents, you're down $7. If you can't stomach that, then just sit on the sidelines. There's always trades to be made after. You do not necessarily have to trade the news, okay? You can wait 15 minutes, 30 minutes. You can wait an hour. You can wait tomorrow. You can let the news digest all day today and trade tomorrow. It might be one of the best trading days of your life tomorrow. But right now, if you trade this and you don't know what you're doing, you might blow up your account and you're not even going to get to trade tomorrow. Okay, do you guys understand what I'm saying? So this is if you're testing things out. Another thing, if you've had a good week, if you've had a good month, don't go blowing everything you worked for on this silly news event, okay? Don't do that. If you've already had a really bad month or a bad week, don't compound it and make it worse, okay? If you're just cruising right now, you're break even, then maybe you can speculate a little bit, but even you don't even need to trade, okay? I just want to make this clear. If there's no trades, there's no trades. Don't worry about it. It's not the end of the world, guys. I think a lot of people get worked up on these red folders and they have to trade them. They got to make profit. All of that it could ruin you as a trader. Okay, so we can adjust things. Like here, we're looking for a sell below here, but no real volume is closing below here. It's just coming down, picking up bids. Okay, so they're still working in this area. We have lots of time. We got 9 more minutes, guys. Let's all have a sip of whatever we're drinking. Any questions, guys? Any questions? And silly mental mistakes. Okay, this is another thing. Remember here, we have US 30, we have NASDAQ and gold. So for me too, if I'm trading US 30, my broker has different lot sizes for when I'm trading US 30. If I use I'm just telling you guys, a standard lot for me with US 30 is 10.0 with my broker. That's a standard lot, okay? That's $10 per pip. If I was to run over right over here and see gold, and then I don't adjust my lot sizing, and I hit a buy or sell with gold with the same, you know, when you're using MT4, it leaves your previous lot size in there, and you don't adjust, and I come over to a new security, and I make a mental mistake, and I use that same 10.0. Guess what, guys? That's not a standard lot with gold. That's 10 lots with my broker. So if I make a silly mistake, that's $100 per pip, and it could be a disaster. So I'm giving you guys heads up. Make sure if you guys are flipping from index to gold, you got to know with your broker, your prop firm, your lot sizing. I shouldn't be the one to teach you this. You should know this yourself. Okay, so if you're flip-flopping different securities, make sure you don't do mental mistakes. Another thing is factor in your slippage. Don't be trading these securities if you got a 10 pip spread. It doesn't make sense, okay? And you're going to see that the volatility, the implied volatility is going to take the spreads and start moving them all over the place, okay? So even if the spreads are not cooperating, don't trade, okay? You got to factor in slippage, okay? I cannot stress this enough. If you don't know what slippage is, you better learn what this is. Slippage is if I get into a trade, my broker might take seconds to execute it. I'm thinking I'm buying right here. All of a sudden when it buys, it's already in 6 pips of drawdown because of slippage. And when I think I'm cashing out 30 pips, when I finally close it, it might be only 18 pips. that's out of my control. That's with the broker. So that's why sometimes when I'm trading, I'm pipping and dipping at strength of candles. Like if it's a green candle and I'm in a buy and it's approaching this red box or this daily, that might be an opportunity for me to scale out on the strength of the candle to try and avoid slippage. That's just, it's part of trading, guys. I'm just trying to teach in a live environment. This moves fast. I don't like back testing as much. I kind of hate that back testing, because always we could have said we should have done this, we could have done that, we should have done this. There's no raw emotions in back testing. Okay, you know when you say you see a green candle and you could have done that, and then it pulls back 70 pips. It's easy to see on back testing. Yeah, when you just see it come down and catch a wick and go back up, you should have. But some traders are actually holding that 50, 70 pips. Your heart is probably pounding by then if you're down 50 pips and draw down. Okay, so this is a real live environment, guys. Okay, we're not back testing. So make sure you show your account or prop firm as much respect as it deserves. We're not here playing games. We're not gambling. Okay, I'm not gambling when I trade, and I'm not playing games here. So I'm not here to waste your time. I'm really here to help you guys, and you guys to take this serious. Okay. This is where you got to learn discipline. If trading volatility is not for you, sit on the sidelines and don't trade. And don't worry about the woulda, shoulda, couldas. I could have got in here. I could have done that. Okay? End it right now. You decide. Are you a trader that likes volatility? I love volatility. So I've loved volatility for over 20 years. Okay? So if you don't like it, then you shouldn't be in here trading. Okay? You should be on the sidelines watching for maybe a bigger move that's to come. Okay? And guys, I use feeler trades too when I'm speculating. Okay, so I do that too, where I use smaller sizing if I'm speculating, something like 10 cents, insignificant, because those help me get raw emotions in the trade, see how the market is moving. Then if I feel confident adding a position, I'm going to be adding a larger position in the market. Okay, so if you have to, use the smaller feeler trades to feel out this market, guys. Okay, so we are 4 minutes away. Okay, so please, guys, trade with proper risk management. I'm telling you on this call, there's going to be traders who lose money. There's going to be traders who blow up accounts. There's going to be traders who make money. There's going to be traders who make a lot of money. There's going to be traders that pass accounts. So unfortunately, that's what trading is. For every winner, there's got to be a loser. Every loser, there's a winner. That's it. Let's try and be on the winning side. Okay. Sorry, guys, I'm not trying to spoil the party or anything like that, but I'm just trying to get everybody understand that this could be insane. Okay, just remember that you could be in a trade right now thinking you're buying, and then it could be just a red candle that just shoots down here. You know how many times have we seen it where it's just off the charts? It's just a red candle. And sometimes there's nothing you can do. If you're one of those traders using pending orders, okay, like if you're using a pending order up here, there is traders that gamble with this. Pending orders up here waiting to get triggered and break out. You could get triggered, but it could get slipped up and it could get a wick and then come right back down. And before you know it, you're in that trade and you're in drawdown. Okay. Do I use pending orders on use? Hell no. No way. But some traders do it and they're really good at it. Not my style. I don't do that. So if you do that, make sure you understand what you're doing. Some traders will place a buy stop above here and a sell stop below here, and they think that one of them is going to get triggered and go into direct profit. Yes, that can happen, but you think the market maker doesn't know that as well? They could come down here, right here, trigger you in your sell stop, and then come right back up here, trigger your buy stop, and then bring the market right down here. And you've lost there, and you've lost there, and you're hedging with 2 losses right here. And they're going to squeeze you out of there, okay? So just be careful what you wish for, how you trade these markets. And if you've had a good day, guys, please do not blow your account right now, okay? Preserve profits. Remember, there's going to be trading at 3 o'clock, 4 o'clock. There's going to be trading in the Asian session. There'll be trading in London tomorrow. There's going to be trading in New York tomorrow. We also have Thursday, Friday, next week. Okay, don't do anything silly, guys, please. Here we go. Okay, so 1 minute, 90 seconds. Okay, so for gold, if you're more of a aggressive trader, you can start to bring like the buy in here at 1955. If not, continue to wait up here. Okay, remember, these are aggressive areas. Like it could just be a green candle that opens and breaks right out here. Before you know it's 20, 25, 30 pips. If not, we wait for the full 5-minute candle to close. That's, I just want to, guys, this is, here we go, okay? So please buckle up. Don't do anything silly. Look at your spreads right now. If there's a security you're interested in, like if you don't trade NASDAQ or US 30 and you only trade gold, focus on gold, but focus on your spreads right now. What are your gold spreads? Mine are 2.5 right now. That's high for me. Normally I'm 1.2. I'm at 2.5 pips for my gold spread right now. That's considerably high as to what I'm normally used to. It's fluctuating. It's going from 1.5, 2.5, all over the place. My US 30 spread is 1.2 fixed. NASDAQ is 80.8 fixed. GBP, JPY is getting out of control. It's 4 or 5 pips right now. Okay, here we go, guys. 10 seconds. Please, let's watch the moves. I will be focusing on US 30, but I'll look at everything else. I wish I had Bookmap uploaded here. Sucks that we don't have it. Here we go. Okay, let's see. Okay, red. They gapped it. Okay, red. Look at gold. That's what I mean. Just a drop. Now let's see if they pick up liquidity. Let's see if it's a wick or it comes right back up. If it's continuing to drop. If the volume is continuing to stay near the low, no. Look at how it came into the green box, come right back up. Look at how they gapped US 30 down into here. Okay, this is what I mean. This is volatility, guys. Okay. Let's see if gold can pick up this liquidity. Then you see how I brought the buy now down to 1955 in case they pick up this liquidity down here and it comes back up. If not, gold is going to continue to push down. There it goes to the hourly. Right there. See how it cut right through? Okay. Yep. They pinned it right there. And if anyone can let me know what they did with the results of the number, that would help me. Okay, we're still bearish, big bearish. Gold is bearish. 5.25. Okay, so unchanged. Okay, unchanged. Okay, so the market is maybe just continuing in its original direction. We had a head and shoulder pattern breaking down. Gold was descending anyways. Okay, so maybe this just strengthened the decision to keep pushing it down. If gold loses this hourly, could come down to that daily 1942. Right here, I'm going to start flipping boxes red, getting ready for maybe the next candles. Okay, it's nothing crazy. We're following unchanged. Okay, so we're just following the change of the market. But let's see if they pick up any liquidity down here. Okay, gold, big sell. Okay, so if you had your sell stop there and you got activated, that's good for you. This time it worked out. Same with if you had it on NASDAQ. Okay, it worked out. But you gotta consider maybe taking some profit off there because this is what can happen. It can come down there, catch a wick, and go all the way right back up because there's bids in the market. There's bids. I wish I had the Bookmap to show you because look at now what can happen. Okay, it could come all the way roaring right back up. Even gold came all the way down there, 1944. If you don't secure anything down there, you got to hold this pullback. It's not the easiest. Okay, so let's see if the market will rotate. See how now I'm kind of getting a little bit more aggressive. I'm bringing in case a buy at this daily area for NASDAQ. Maybe if there's a potential buy, maybe like to fill that gap right there. If we come up on US 30, like above here, I'll be watching. We're still watching it, okay? Okay, we still have 2 more minutes for this candle to close. Okay, it might continue to push bearish. Okay, we'll see if it can close below here. And then if it closes below here, what we'll do is we'll flip this green box red and we'll see if we can keep volume below here and maybe we can catch maybe a retest and maybe continue going down with the market. We'll watch as NASDAQ closes. We're breaking the daily low, the purple. Let's see if it can get more volume close below there. Gold is coming, could tap the daily low. And if it keeps dropping, guys, 1940 is that big green box down in there. If you're not in a trade right now, let's wait for the close of the body. Just keep going through your motions. This is a green box. You should be making it red in case there's a retest. Don't wait for me to do this. If you're a gold trader, you should already have this box red. Don't wait for me to do this. Okay, 1 more minute to go. The market is still pushing down. Gold is still pushing down. You know how like some securities were completely overbought. So maybe now it's a good time for them to push the markets down. Did anybody get slipped up trading? Like it's a nice big candle, but remember slippage, what I was trying to say. Okay, here's the last 30 seconds. Look at, so the US 30 came all the way down, picking up a wick. We're going to see where it closes. Gold did it break the daily? No, it came close down to the daily low, but it's getting rejected. There's going to be some bids. We'll watch where it closes. Okay, so we're going into the close. This is the first 5 minutes. If you didn't want to trade the craziness, Kobo, no problem. Don't trade this craziness. Okay, let's see where things are going to close. Things might reverse. Things might continue in the direction. Okay, so here's the close. They opened it red again. Let's see if it comes up for a retest for US 30. Gold is ignited red. If it can hold this red head and push down, it might come down to fill this wick. But if it flips, it's going to come back maybe to retest this red box. Okay, and NASDAQ, let's flip this. Red. Okay, so we're going to see if we hold some retests right now. Okay, let's let it see if it picks up bids and come up. No, markets are continuing to sell. You can continue to sell. Now we rejected here. We took out the low. Let's see if more volume can come down. And we come down to the daily and break it. Yep, sells, guys. Sells, even on gold. You can continue holding your sells. See how we're below the red box. Okay, so it's continuing to push down. Let's see if we can take out this. Yep. Here we go, guys. I wish I had Bookmap on here. Oh, man, we would have saw this so good. Okay, and let's see if gold can break the daily low. Yep. Guys, if you're in gold, trailing stop loss down. If you're in NASDAQ, trailing stop loss down. US 30 sell, trailing stop loss down. Let's see if we continue to penetrate down here. But remember, there's going to be a lot of bids in here, okay? Even half of this zone right here. There's going to be bids right here. Okay, it's coming down, guys. Good sells. Go trailing stop loss if you can. Okay, and we've got a new low. Gold, beautiful, guys. If gold can dip down into here, remember, this was a big daily area. It's a beautiful move on gold. Yes, US 30, guys, is dropping. Guys, these are not small moves, okay? The break of the wick right here that's 30 pips. Okay, let's see if it can come down 50% of this red line. NASDAQ is pushing down everything. Guys, it's selling pressure, okay? Selling pressure. Beautiful. Everything is breaking down, guys. Yes, there we go. Beautiful move on US 30 for that second sell attempt right here. Yeah, guys, that's 40, 45 pips. Okay, right down there. 50 pips to the red line, okay? That's half of the right here, half of the tape. 50 pips, dropping. Good, guys. Break evens on everything if you can. Excellent, guys. Okay, not bad. Not crazy volatility. Very, very nice for sell side. Okay, but don't get greedy, everybody, please. Gold is coming down to the next daily big green box. Okay, don't piss away all of your money here. Amir, 2%, you're done. Congrats, bro. Guys, oh wow, that was a nice US 30 drop. Excellent, guys. Okay, this is. I'm scaling down here. Oh, hit the daily, guys. 85 pips right down to that daily. Oh, that was nice. Okay, please, guys, secure if you can. I don't want to hear anyone not securing. Oh my God, shit. Look at US 30. Broke the daily. That's 100 pips, guys. Just from here to there. If you guys were in here, oh my goodness, guys. Because when Powell comes to the podium, he might reverse this move in the next 20 minutes. So, or even before. So don't get too greedy, guys. Please, a trailing stop loss. A trailing stop loss right now in these conditions is your friend. Bring it down, bring it down, bring it down. Secure money, guys. FOMC is known to blow up accounts. And if you guys are making money, you guys are doing really well. Don't get greedy. Because a next candle could come up green and come take you out. Okay, believe me. March 28, you're done. 3%, good. Congrats. Sherry, 2%. Unreal. Amazing, guys. I have the highest temperature and fever right now, but I feel great, guys. Okay. I secured down there. I secured a little. I didn't get the whole move, but I'm happy. Okay. Okay, so this candle is going to close in 1 minute now. Where are we going to close? Okay, again, 50%. You know that red line where I place that red line? Let's place a red box there now. If we continue to push down. If you're looking for quick buys, if things close like above here, you could look for maybe a quick little reversal buy. If it closes above, retest this and comes back up. But don't counter unless we get close. But if you don't do anything down there, look at it. That wick just took away a majority of your profit. Okay, same with gold. If you don't do anything down there, same with NASDAQ. That's why, guys, I'm losing my voice here, trying to tell everyone not to get greedy. Unless you want to stomach this pullback. That's up to you. I personally don't like that. I don't like leaving pips on the table. Okay, because look at what can happen. Look at what can happen. Look at what can happen. The wick come right off this big daily area. It doesn't need to come into this green box. It came so close. Don't get greedy for 3 pips and then now look at the reversal. Look at now what they do. They pump up a green candle. Okay, and that's not a small move. This wick, if you don't do anything there where it is now, you just gave away 80 pips. Okay, don't be silly, guys. Where did I enter the break of, when it was coming down the break of this wick? Right there. Okay, making the new low on volume. I loved how it opened, retested, didn't come to the red box. They brought it down. I took my sell right here. And I got slipped up in a positive way, where I was starting to close my trade when it was coming down to the red line. When I closed, it started breaking. So I got slipped up in a positive way. Sometimes you can get slipped up in positive way. I actually got more pips than what I was looking for when I closed the position because it was coming down with the volume. So sometimes slippage can go in your favor. But this greediness, you got to learn. Okay, I can't teach this. If you do not secure anything down there or down there or down there, then don't be surprised if there's a 100 pip pullback. This is volatility, guys. Okay. Yes, it can go back down, absolutely. But why chance that? Why? When you can go maybe right back into another sell if you want. Okay, how is everybody doing? Is everybody okay right now? Russell, you're good? Achilles, all good? Okay, guys. You guys know how I trade. I pip and dip. So you guys gotta do what you gotta do. Okay. I'm not trying to force anything on anybody, but please manage your own accounts, guys. And let's continue following what's going on. So we came up, we got rejected. Are we gonna close below this area? Okay. Remember green box now. We're holding this area. So remember, I just out of freestyle. I just picked this area. Okay. Did I look to the left? No. And you see how most of the volume is concentrated right here? Why? Because it's 50% of the zone. It's reading the tape, guys. I'm a tape reader. I've been doing this all my life. This is how it was back in the day. Vivian, win. Congrats. Good job. Okay. And gold, now what's gold doing? We're right back to that hourly white line, consolidating in here. Maybe gold is going to trade sideways in here. Okay. We'll see if it cools off here and continues to push down. We have US 30, okay, pulled up, rejected. If this can close below here in 2.5 minutes, maybe we're going to see even US 30 and NASDAQ keep pushing down. Mohamed, second FOMC with profit. Congrats, bro. That's amazing. Yep. So this, if you were able to stomach that pullback, like let's say you sold in here, okay? I know that pullback, maybe you still held, and if you did, you're a soldier. Okay, that was a 100 pip pullback. If you're still holding your sell, now it's coming right back down and rewarding you for holding. But I don't play that game. I secure. But if you were trading up here and selling, I know that hurts other traders selling this candle, but for you, maybe that doesn't even phase you. So what you got to do now is you need to make your own red box right here. Okay, that's what I would be doing. Red box here. Okay, that was that little reversal buy if you wanted, but now if you're looking for a real buy up there, we got to wait up there. Okay, same with NASDAQ. If we're looking for a reversal buy, we got to wait at that purple line. See, we got to get more volume closing above there for a buy. What I would do now is see if the volume is going to trade inside here for a little bit. Same with Nasdaq. Is it going to trade in here for a little bit, and maybe we'll follow the next move. Same with gold. Gold is inside here now. So gold might trade below this hourly and the daily low right here. Okay, so if gold kind of maybe closes above here, maybe we could look for maybe a potential buy to reverse it back up. If gold continues to close below here, maybe we're going to take out this half of that daily candle and continue going down bearish on gold. Down in here. Not bad at FOMC, okay? I've seen much worse, okay? There wasn't too much erratic moves. It was just nice moves that kept pushing down. The pullbacks kept going down. So this wasn't too bad, guys. But now, like at 2:30, Powell is going to come to the podium, and now he's going to start talking. Maybe give forward guidance. Why did they pause? Why did they keep interest rates unchanged? That's what we kind of got to listen for. Unfortunately, I don't listen to what he's saying while I'm trading. I listen after, like later on tonight. I watch it over because scalping, you got to be very, very quick. So gold closed above, ignited, okay? That's what I mean. If you're selling, guys, don't get greedy on gold. I hope you didn't get greedy, okay? Because these are big moves on gold coming right back up. Look at it. It could come all the way back up, and you were in a big sell and you were up all that, and now you're just giving it right back to the markets. Don't be silly, guys. Don't give your hard-earned money away. Also, we can watch Nasdaq and US 30. If it can build, and maybe the market is going to rotate bullish. Yeah, there's a lot of adrenaline when you're trading FOMC, guys. But the more you do of these, the better you're going to be. Okay. But maybe I make you guys nervous. I don't know what it is. Maybe because I've been through these, a lot of them, and I know how they can destroy retail traders. So I just want you guys to be aware of everything that can happen. I hope I explained it to you properly. That this is not normally how FOMC moves. They could be really, really erratic. Really, really crazy. We prepare for the worst. That's what we do here. It's like going to war, okay? We prepare for the worst. If we go to war, I may lose my life, okay? That's what it is. You know, when you go to war, that might be the last time you see your family. So you prepare for the worst. Hopefully nothing happens and you come back home safely. But that's what like trading red folder news is. We prepare for the worst. But if we have a good session, then we make it out and we come back home and we got some money in our pockets. Okay? If this is not your style of trading, then just wait for after. But let's look. Okay? It's continuing push down. Let's see where this body can close. We're getting a new 15-minute candle right now. This is a new 15, so it's continuing to push down. Look at where gold, maybe they pinned it in this red box. Maybe if gold can close below here, it's going to continue to push down. I'm interested to see where this body is going to close. They can close it below here. They might be taking out these lows, and this is going to continue dropping down in here. Remember, we never charted down here, okay? So this is a big area. Here's where it's going to come down to. 33738 right here. And then let's have a green box, like right where this wick saved the market right there, okay? So normally I have this done on the top down, but these are big moves for FOMC. So I'm getting ready now, okay? So if it continues to push down, US 30, if we close below here, it might break that low, come down to the red line, and then bounce right off of this green box again. But for you selling, this might be more additional pips to continue to push down. But every time we're coming down here, it's got a wick. Coming down, got a wick. Let's watch where this body is actually going to close to maybe give us that continuation. If they raise the rates, would Dow go bullish? Possibly. If they raise the rates, then the US dollar potentially would have dropped, and maybe with the sell-off of the US dollar, maybe money would have came flooding into the stock market. Okay, that's a possible pathway. Not always guaranteed like that, but if there was a like a US dollar sell-off, then maybe that liquidity selling off the US dollar, where's that money going to move? That liquidity might move into the markets. And then the Dow or Nasdaq would start going bullish. No, yeah, Ian, thank you. Yeah, the volatility is not done, guys. We still have 2:30. That's when Powell comes to the podium, and then we're going to get an extra move of volatility. So we can wait. Maybe he is going to say something, and maybe the market likes it, and then we're going to get a bullish move come back up on US 30. We'll see. Or maybe he says something, and then the move is continuing to push down. Maybe now we're just waiting for the market to settle off and get ready for Powell. Okay. Yes, we are extremely overbought on RSI. I understand that. But with FOMC and Powell, sometimes RSI is just an insignificant indicator. Doesn't mean anything. So we got to follow the volume where it's closing. Yeah, if we get a possible move up here, we could look for buys. Buys above here for NASDAQ. If gold can continue to close maybe above here, we could look for buys on gold. Maybe look for a reversal. Okay, so here's the close. Again, we got to change this box here. It used to be support, now red again. Okay, I know it's a smaller zone, but we got to go through the motions. NASDAQ is still in this consolidated area, but did we close above there? No. Continue to push down. Let's see if we can take out a new low and close below here. Gold is hanging around here. Gold, if it can close more above here, could look for a potential buy. If it comes in here, trades in here, we could look for continuing selling pressure. I'm waiting, guys. Okay, I just took one trade. All I took this whole FOMC session was this sell from right here down to there. Okay, I got my pips, I dipped out, and now I'm waiting. Is everybody okay still? Okay, wasn't too dramatic the first 20 minutes. We've seen a lot more volatility. We've seen a lot more erratic behavior. This isn't too bad. This was just continuing with the move of the market. The news added some volume. Your fever can go away when you get some pips. That's medication. Pips. Instead of taking medication, when you have fever, if you can catch a few pips, all of a sudden the fever can go away. Pips, not pills. I like that. Pips, not pills. I like that a lot. Okay, guys, if you're on YouTube, please hit the like button. This is a bonus session for you guys, okay? It doesn't say it in the description because I didn't have time, but this is a bonus session. We normally don't do live FOMCs. We keep it for the Zoom for our members, but today we wanted to give back to you guys, give you guys a session here, show you guys how we do it here. We don't do anything silly. We don't do anything erratic here. We do our top-down analysis. We do go through our plan. You know, we did our 3 charts. I'm sorry, guys. Normally I Bookmap on here, but I couldn't get the connection with Bookmap. I'm not sure why. I messaged their support team, and they still haven't got back to me. But we're continuing bearish, okay? So if you're just buying, even buyers, okay? If you bought that wick or bought that, you're pipping and dipping out of the market because the move is still bearish. So even if you're countering buys, yeah, they're nice buys. You can get 20, 30, 50, 100 pips out of these green candles that are coming up or these wicks, but you gotta respect the volume coming down, okay? So if you're countering and you're buying, you gotta be aware that you gotta pip and dip out of this market because it's still pushing down. Look at, we just created a new low. So maybe it's gonna bottom out, guys. Let's let it bleed out before Powell comes to the podium. Okay, think about that. Maybe Powell is gonna come. He's gonna wear a fancy suit and a nice tie, and as soon as the market sees his beautiful face, maybe it's gonna start to reverse and go bullish, and we'll hear his voice. And he might be the one that turns the market back up. If it does, we'll be waiting for some buys. If you're in sells, maybe you could start, scaling out a little bit. Don't get too greedy, because we know if you use the RSI, the really silly indicator, it's telling us we're down to 11 on RSI on the 5 minutes. So there's possibly going to be a pullback, but it might just pull back into supply and go back down. But if it is, we got to be ready for it. Justin, if you're done today, one trade, 2%, pip and dip, good. Get out, bro. That's it. Go on with your day. Get your 2% in and out, in and out. You took 2% of liquidity from the global financial markets. Get it and get out. I'm not trying to be disrespectful. I love you, Justin, but turn the Zoom off and go on with your day. If you want to help paint one of my rental properties, I got some work for you. If you're looking, instead of watching paint dry here, come to one of my rentals and you can watch that paint dry. I need painters. Can't find any painters. I pay good. It's just lack of time. Dip and paint. Paint and dip. Yeah, I like that, King Sniper. You're not a painter, you're a pipper. I like that. Ian, you'll help? Just pay you in weed? No problem. I got you. I can do that, no problem. Okay, guys. So we are 5 minutes away from Papa Powell. Let's, again, buckle up, guys. Let's get focused. Okay, I know some of you guys did really well. Okay, but the next 30 minutes is going to be extremely volatile as well. Okay, this is the first half. You know, in a basketball game, we got first quarter, second quarter, it's halftime now. So that's it. We're going into halftime. We still have third quarter, fourth quarter to finish the job. Okay, Jimmy Buckets, he didn't finish the job. Okay, so we got to see now the second half over here. We are completely oversold on US 30 and NASDAQ, okay, if you follow this, but the market is still dropping, okay? So this could be where they want to come down and pick up all those. That's why we should have had Bookmap. I wish I had it. We could have seen where the heat was waiting to come into the market. Could have sometimes when we're just using candlesticks, we can't really see the orders. That's why if you have Bookmap side by side or any depth of market liquidity provider that allows you to see the pending orders, it can help strengthen your decision. So right now we're just doing the old school candlesticks, but you see how I made my green boxes as if they are orders in the market. So we got to respect them. When gold came down here, yes, it didn't tap that yellow line or come down in here, but it's still, there's a huge orders here. Okay, you got to understand that. So if you were in a gold sell and you didn't do anything down here, it could reverse on you. Okay, so if this thing starts to build up, remember we haven't even, this is the first bottom. Okay, could come down there, back up here, maybe we come back, pull back down, then maybe then we got like a double bottom kind of extended low breakout with Powell coming to the stage. Okay, it could just pull back and then keep going down. Okay, right? But these pullbacks are serious pullbacks. Like if we're to buy from here to there, that's 50 pips. Up to there is 100. Okay, so you really got to understand, if you're really aggressive and you want to come in here and trade the consolidated area, you can absolutely do that, but you got to understand what you're doing in here. And this is a big zone. It might look small, but with the volume moving the way it is, that could fill 30, 40 pips and 50 pips in no time. Okay, so now I see it's building a little bit of a base down here. Right here. It could just retrace up here and continue dumping. Okay, remember that. That doesn't mean just because Powell's coming here, that means that the markets are going to go back up. It could just momentarily pull back and continue dropping. Okay, maybe he says something that's bearish tone. Maybe, you know what he could say is, we're pausing right now, and then in our next FOMC, maybe we're looking to quantitative tightening again. Okay, just you got to listen to the way how he words things, and that's what the market listens for. Gold is still inside here, so we're going to wait for it to see if gold can close above 1945 here, 1946, or close below here. Nasdaq is still building in this consolidated box. So if you got your pips and you dipped out of the market, we continue waiting, or we just got to be patient and disciplined. If there's no move at 230, 240, 245, remember power hour is around the corner, okay? There's going to be moves, guys. Just all I'm recommending for you guys is judge whether you made pips, secure how many you made, and don't give it away, okay? Just up, Papa Powell has a stripe tie, okay. Normally it's solid, stripe. Oh, wrong date, okay. I think you wore the stripe tie last FOMC. Okay, so what I'm doing now is see where the volume is now consolidating down in here. Sorry, I didn't want to move that. I want to move this white box. See what I'm doing now? I'm bringing like kind of the block down to here. Okay. See, what did you see what I just did? Before we were consolidating in there, I just dropped the neutral box right down in here. That's all I did. Okay. And then if there's a sell, okay, it could be a liquidity grab. It could come down, and we're going to watch, see if it catches a wick here, and maybe we'll be able to buy a wick if you guys have ever done that before. But here he comes, guys. Okay, get ready. Okay, this is 230 now, right now. Get ready. Okay, so we open red. Let's see if it picks up a wick and breaks out of here. Okay, no, it's still holding. Okay, red. So we're still in the consolidated area. Let's see if it comes down, maybe take out more pending orders down here. It's holding. If it's still in here, okay, let's watch, see how it accumulates. Gold is still in here. So we didn't get a crazy erratic move at 230. Okay, so it's just inside the box still. Today has been a very calm FOMC, if I must say. Hasn't been too crazy. He's not there yet? Okay. So the market is just continuing to consolidate inside here. Okay, now we're pushing up. So we respected the daily yellow line. Okay, this could be, I can go even to the 1 minute candles and watch the 1 minute. Okay, I don't normally want to teach you guys how to trade 1 minute candles on FOMC right now, but there's the 1 minute candle. Did it close above? Not yet. So the next red minute candle coming down. Okay, let's see if it can come down, pick up liquidity again, another higher low. Is it going to test this yellow again, or maybe come down here? Okay, so Powell's here now. Okay, Powell is on the podium. Okay, so this 1 minute candle caught a wick. Oh, it's continuing push down ignited red. Gotta be patient. Okay, so no buys. You guys see I'm on the 1 minute candles now. I'm watching one FOMC on the 1 minutes. Okay, so it caught a nice wick. Double bottom, kind of at that daily 33,800 level. Yellow, still holding. This candle is going to close in 10 seconds. Still 1 minute, still bearish. So if it breaks this yellow and it comes down here, we're going to test this green box again. Might be a double bottom on the 1 minutes. It's still coming down. Shouldn't be in buys right now. Okay, now we got a bullish ignited candle. It may test 50% of the red candle. Okay, guys, I'm on the 1 minutes. I'm trying to break this down for you guys on the 1 minutes now. Okay, so it's still bearish, still bearish. If we look at the 5 came up there. If you got caught buying up there, yeah, you got caught. Now it's coming, it's barcoding, red, green, red. No direction right now for all three securities, but still maybe pushing down. Okay, so let's see, back to the 1 minutes. Remember, if it breaks down here, it could be a liquidity grab. There's bullish divergence. Okay, you can clearly see bullish divergence on the 1 minutes, but let's let it build. Now it's coming right back up. Gold is building. US 30 is building. Okay, here it is. This candle is going to close in 10 seconds. Let's watch where it's going to close. This is 1 minute, guys. Okay, let's watch where it closes. See how it came down there? Did it break any lows? No. So it's a tap and go off of this green box right here, off of this 50% candle. Did we close above there? No. So it's still inside here. Let's see if it picks up quick liquidity. And I'm going to buy a breakout candle. Yeah, I'm buying. Okay, I'm buying this 1 minute candle. Okay, and I'm looking for it to come up to red box. Okay, I'm buying this. I'm going to look for it to come up to red box and then see what happens up here. Stop loss. Sorry. Guys, please don't text me right now. Don't text me. Guys, don't text me, for real. Don't text me right now, okay? Sorry, there's guys in the group who are texting me. Guys, please, not in a live on FOMC. Okay, did you see how it popped? Okay, that popped for 20 pips, guys. Not sure if you guys scalp 1 minute candles, but let's see where it closes now, okay? But that initial pop was 20 pips. Okay, so let's see the close. Let's follow this volume, and then we can flip to the fives. Also, gold, okay? So they gapped it down. Let's see if they can gap down, pick up quick bids, 50% right here where my cursor is, and then start breaking this thing out, and then we'll flip to the 5 minute candle. You got in and out, Ephraim? Yeah. That's why I told guys, don't text me when I'm doing this, please. Okay, so let's see. Again, we got to get more volume closing above here, but it's still getting a higher low. Still building. Yeah, I saw a lot of you guys got 10 pips in and out. Yeah. Okay, I was just showing you how 1 minute candles can move. But see, that's why sometimes I like scalping 1 minute candles for kind of that move. But if you're still in the fives, the 5 is still consolidating inside here. Yoda, what's up? Are you hand up, or was that you texting me? Guys, look at the 5, ignited 5. Okay, we can flip back to the ones. Blair, I'll get you in 1 second, bro. Hang on. Okay, green, red, green. We didn't really break anything. Let's see if we can get that 1 minute volume closing above here. We could get a nice push up here. Okay, we broke out, but we need more 1 minute volume to close above here. Yeah, you can unmute now. Yoda? Sorry, I didn't see you.
Hey, what's up?
Hey, what's going on?
Oh, man.
Yeah, guys,
what a drop.
Yeah, it was nice, but maybe we'll get a little move here, pulling back up. Guys, gold, okay? Gold, buy zone, NASDAQ, if it can close above here. Guys, I'm on 1 minute. Sorry, I don't want to keep you guys on 1 minute, but 5. Here's the 5 now. So this is going to... Yes, there it goes. There's the pop. Okay, let's get this 5 minute volume moving now. Let's get this tapping this red box. Okay, if we can get it to come up here. We want to follow now this 5 minute volume. Here we go. Okay, so we got now 1 minute candles holding the previous. Yep, there's the high break. There we go. There we go, guys. NASDAQ and gold on the 1 minutes. Here we go. Now it's testing the box. Guys, that's a 40 pip move. Okay, right up to there. But let's see if it continues. If you're continuing, you're going to follow the 5 minute volume. 5 right here. So here goes the 5 coming back up. But that filled a zone on the 1 minutes. Here it comes up. If we can take out this high right here, 33882, then we might be coming into this zone. Look at NASDAQ completely filling. Gold was buy, guys. Okay, Powell now changing the tone of the market. You can pip and dip. I know some of you guys got quick 10, 15 pips, but if you're still falling, yeah, here we go, guys. Very, very, very nice. Yes, there's the pop. There we go. 50 pips, guys, like that move right there. Okay, just be patient. Just be patient. This can continue to drive. But scale out too if you want. See the 1 minutes, how they filled? Did they break any real support? No. Why? Because the tap and go, 50% of this 1 minute candle, you know when they call fair value gaps, chicken wing box, whatever you guys want to call it, right there, tap and go. Okay, tapped and go. Right up to there. Secure, 40, 50 pips. Don't get too, that's zone to zone, guys. Okay, if you don't know the way how we trade zone to zone, you shouldn't be learning on FOMC. And look at gold, how it came right up, tapped 1950, 1950, psychological area, getting pushed down. That's a 50-point move on gold. Get in and out, pip and dip, guys. Don't get too cute here. Okay, this could be a retracement where it comes up and then it's going to come back down for the double bottom. But if you don't secure 10, 20, 30, 40, 50 pips up there, then this is what the market does. Why do I have a big red box here? We walked right into that red box. I always say, guys, if you can, secure on the strength of the candle. If you can. If you're still holding, yeah, it pulled back, but now it's got more volume. It's got more fuel. It can continue to break out. But that's not always the case. It could come right up there, got rejected, and all of a sudden we have a red candle coming down here. So I don't trade with what it shoulda, couldas. But I can jump right back in on the next bar. Okay? Remember, I'm following the volume. That doesn't mean I got to stop trading. I'm 2 for 2. I sold and I just bought. I can go in for a third trade if I want, but I want to secure my money. When I trade 1 or 2 hours a day, I do it to secure money. I don't do it just to watch candles move. Do you guys understand why I went in on the 1 minutes? Sorry, I don't even know why I did 1 minute trading with you guys. It's just habit, guys. I didn't mean to jump into the ones, but normally this is how I trade these type of events. I apologize, guys, if 1 minutes are too fast and crazy for you. But I like to also watch. So we filled 1 minute zone filled. Now you see the 1 minute candles, how they're barcoding, green, red, green. This might have momentum to continue to break, but that's it. It got rejected 2 times in that red box. So you got to make a move up there. You got to understand when it comes out. It came up again 2 times to allow you to secure profit. If you didn't, you better hope that this body keeps fueling up and keeps gathering bids. That's the downside. We don't have Bookmap to see this. Fuck that Bookmap. I wanted the connection, couldn't. Sorry guys, I didn't mean to swear there. Sometimes I forget I'm live. But really upset with them. Okay, so now the full 5 minute body, here's the close. We came up to the red box, we came here, now here's actual close. Here's an ignited bar. Let's see if it comes down to retest. If not, this could be an ignited bar. Here's the retest coming down. Flip your zones, guys. Okay, remember, yep, it's holding. Let's see if it holds. NASDAQ, flip this red box green. Okay, gold. This zone now for gold. This can be a green zone if it ever pulls back in here. Okay, there was a nice retest on the 5. Okay, so holding. Yeah, we can go in. I'm going to go on an additional buy. I'm going to buy again and maybe not as big as my normal, those 2 other sizes, but I'm in a buy. I don't want to give back what I just made, but I'm going in on another buy, smaller size, and there it comes right back up. Again, another 20 pips. Here we go. Now with this one, let's see if we can break this. Yes, guys, this was an additional buy right here. Let's see if this 5 minute volume can take out that high, and then we're coming right back up here. But if you're happy with their 20 pips, you can grab your 20 right there. Okay, but here it goes. Guys, this is big, this like right here to there. It's 30 pips. With slippage, you can grab 20. Okay, but let's see if it is still 5 minute volume. They're high. There's 35. Let's see if it takes out here. 40. Yeah, come on, baby. Yes, 40. It's giving us a third attempt up there, but with this volume, it may push for 50 pips. Coming up 50% of this candle right up there, 55.60. But if you're happy up there, woo, there it is. Oh, Powell, Papa Powell with the reversal, 60. Let's all eat, guys. 60 pips. Secure if you want, okay? They add up. 30 pips here, 50 pips there, 50 pips there. You can get in and out with 100 with minimal drawdown. We haven't had too much drawdown, guys. I bought that as soon as it broke right there. I'm out. Pip and dip, guys. Yusuf, 5% done. Gucci sushi. Ooh, you're going to eat the Gucci sushi today. I don't know what that is, but I've never had Gucci sushi. I just eat pancakes. Blair, do you know what Gucci sushi is? I don't want to know, man. I don't even know what Gucci sushi is. I have no idea, guys. But if that's what you're eating, God bless. Eat it all. Okay? Get your Gucci sushi, everyone. Just like that, guys. This is scalping. Okay? We're scalping FOMC. That's a 5 minute, but normally I watch the 1 minutes. So right there, kind of bought that retest on that 1 minute, and you're part of this coming right back up. Okay, now the market is continuing to push, trying with Powell talking. I don't know what Powell's saying. I don't know what he looks like. I have no idea. I follow price action right now. I will follow later on. I'll watch Powell's conference and listen to what he says. But right now, I'm trading price action. Guys, I only have 15 more minutes, so that's good enough for me. I've hit 3 of 3 trades myself. I'm happy with well over 100 pips. It's question time now. Thanks, guys. No, I'm here for 15 more minutes. I'm not leaving, but if we're still in these trades, look at what's happening. Like gold too. If you were in gold buys, you see how it comes to the daily 19. See this 1950 area? That's why it says big psychological order block. It's coming up, getting rejected. Coming back up, getting rejected. If you're scalping gold, it's giving you 50 pips as well. But if you don't make a move up here, the market will decide for you. Okay, if we can close again above this red box with this 5-minute candle, maybe a nice 50% retest, and this thing could keep popping, guys. If you're holding trades, I don't normally hold trades with trailing stops, but if you are, I hope this thing can, look, it's continuing to fuel up. Every time it comes down, it's fueling up, fueling up. Let's see if it can take out the high in that daily, yellow line, 33920. And that's going to be maybe a 70, 75 pip move. NASDAQ is trying for the next area up here. Yes, there it goes, guys. Look at, so from the open right here, if you didn't do anything, look at how the market with Powell comes right back to the podium, and look at how it's a dump and pump right back to where it started. That's what I mean, guys. Don't get married to your trades. Just because you're in the sell and you're up 100, 200 pips, if you don't do anything, the market will rotate right back up and take all your money, okay? You're a retail trader. You're not a banker, guys. You're not. I don't think any of you guys have billions and trillions of dollars to trade. We're all retail traders, okay? Even if you have millions in the market, it's still peanuts compared to what institutions trade. Don't get silly, guys. Don't get greedy. Don't get greedy. This is maybe one leg, a V recovery. Okay, it came down. Look at NASDAQ. It came down, bottom one, and coming right back up to the neckline. What happens if we retrace back down, pull back down into here, and we see what happens? Maybe it holds here and continue breaking out of here later. Blair, what are you saying for NASDAQ? What's NASDAQ going to do? Any earnings coming up this week? What's going on?
Adobe has earnings.
Adobe?
But yeah. But man, you see what they did though? I knew it was gonna happen too. So the other day they left the gap unfilled on SPY.
Mm-hmm.
The drop filled the gap right to like to the last cent. And then they bounced it off and now they're pushing it back up.
Yep. Guys,
See?
this red box, if you can, make it green now. Go through the motions, please. Learn how to do this. So if it pulls back, remember this was a red box, but now we got volume closing above. So if it ever comes back down to retest this, we're going to look to pile up bids. This is how I normally used to do it before I had live liquidity feed. But with this combined with like Bookmap or any other provider, you can start to see the bids piling up, the heat in here. So if it ever comes down here, this is probably like where the VWAP is. You know, the VWAP when we're normally using it, it's probably in here trying to pick up some bids. If it holds this area, then we're going to probably penetrate this red box and come through here. And this is where it all started, okay? Kind of like NASDAQ, here's FOMC. Started right here. So we're right back where it started, okay? So if you're going to trade longer into power hour, make sure you have your zones. This red box should be green. These are all levels. You see, I'm not changing the size of the boxes. I'm just extending them across. But some are going to become more active. This one might get activated. Like red candle might come down, activate this, maybe pick up bids, and this one is resting down here. See how we're coming down now? Are we surprised that it's coming down to retest this green box? No. So if you were in a buy from here to there, that's where you can liquidate at the top of the red box. If not, I'm sorry guys, you got to hold that pullback. Some of you guys can stomach it, but you're giving away 50 pips. That's not a small candle. That's 50. So if you bought this candle, you could have been up 100 pips, but you just gave back 50, but it caught a wick. So it could be coming right back up. Yes, and you can continue drive, but that's not always the case. Could have came down here and red and coming all the way back down here. Then you would have gave back 50 or 100 pips of your profit. Okay. So I just pip and dip. I don't let the market decide for me. I decide for myself. I decide for myself when I'm happy. I'm not greedy. I'm a very humbled trader. Sometimes I'm scalping for 10, 15, 20 pips. If I can get 50 in a couple minutes, you better believe I'm happy. Okay? Okay, do we have any questions as to what just happened? Hopefully I kind of broke that down for you guys. You can see I don't trade gold too much. I trade Nasdaq, but not as much. I'm more of a US 30 Dow trader. That's why more of my analysis is on US 30. Blair is top dog for Nasdaq. If you want to pick anyone's brain, it's Blair. This guy knows tech. I admit I don't know tech. I hate computers. I've hated computers all my life. I failed computers in school. I hate them, and I still to this day hate them. My daughter is grade 1. She's teaching me how to use my laptop. I hate these things. I've hated them all my life. I know my strengths and I know my weaknesses. I don't like tech, so that's why I don't trade it too much. But trading patterns and liquidity, I could do this no problem. But Blair follows the tech companies. Yeah, I was born BC, before computers. I like that.
All right, keep an eye on NAS here.
Yep.
It's looking to break the downtrend.
Yep. So we pulled back into just almost this demand area, but doesn't have to come right into there. Got a nice wick. It's a nice hammer candle now. We're going to close in another 60 seconds. So let's see if it can penetrate through this big daily area. Remember where we were consolidating before FOMC? So this is where it might continue to come out. Gold. We'll follow gold too. It can continue close up here. And it's like FOMC, the start was a non-event. Remember, it was unchanged. Okay. So this was just maybe continuing the trend down with the market. Just grab more liquidity. And now with the unchanged market, it's coming right back up to where it started. Okay. But you see here how it came right back down. This is where it came. Remember, I flipped the box red, green. We could have also bought that candle as well if we wanted. Okay. This is where you can learn how to trade with the move of the market. Could have bought. I would have been more aggressive myself if I had Bookmap, seeing all the bids. Without looking at Bookmap, I'm kind of just a little bit conservative, because Bookmap would have really helped me see all of that bid liquidity in there, and I possibly would have also bought that candle as well. But Nasdaq is breaking out bullish again. So the pullback, if you can stomach these pullbacks, but if you understand the zones, maybe that might help you hold trades longer. Look at gold breaking out, guys. Okay, I have no idea what Powell is saying right now, and I don't even care what he's saying right now, because I'm just watching the liquidity right now. They're tanking the US dollar, Ian. Sorry, Blair, go ahead, bro.
No, I was going to say NAS is ahead of the other indices.
Yep.
SPY is trying to follow that same move. If SPY breaks, NAS will push 15,000.
15, yep. Yeah.
If SPY breaks too.
Yeah, guys, there's 15,000. Our high of the day is 15,015, the purple line. There's US 30s high of the day, 34,008, right up there. That's why I have that big red box. We came up there. That's, that's where we were trading before. That's when they gapped the market down. FOMC took it down here, and we're coming right back up. It might be a lower high in this red box and continue push down. Maybe we might have new consolidation going into power hour, maybe in this area. So see what I do with these? I just move these blocks of consolidation. See where we started? We were consolidating this entire area. So it looks, look at it, like a head and shoulder pattern, inverted. Left shoulder, inverted head. Now we're trading right back in the right shoulder, and maybe we're going to see Nasdaq pop out. If I'm trading again, I'll look for maybe a close below here, push down to there. Gold, flip this big red box, green now. We're above 1950. Psychological area, holding, demand, okay, any pullbacks. If gold sells, maybe sell below there, break 1948, continue down there. If it's continuing to pump, we're pushing right back up to these areas, guys, okay? So you see FOMC, strategically, they dump the market, Powell comes at 2:30 and pump the market right back up. We're going into power hour. Might continue squeezing this way or pull back down into here, okay? If you're happy, if you made a couple percent, you got some pips in the bank, walk away, guys. Walk away. Let's take this momentum into tomorrow. Like Dave killed it with you guys in the New York sessions. You guys have been doing really well. Just keep adding to your account. Hit the likes on YouTube, guys. Subscribe, notifications. This was a bonus FOMC for you guys. So that's all we ask in return is just the likes, subscribes. Share the videos with your other trading communities if anybody's looking for free education, live education. Remember, this is live education, live trading. It's not back testing. It's easy. Like if we were to back test this, like later on, if we get on the call at 6 p.m. tonight after FOMC, then we'll say, yeah, you should have sold here, came down there, we should have bought, but we were buying, and then there's emotions involved in pullbacks. It's nice to see when you're backtesting, it's easy, but remember, these pullbacks create emotions. So anyone can backtest. I can get my son down here and he'll do backtesting for us, but there's no raw emotions involved in it. Okay, so that's why you gotta make decisions when things come up here. If you don't, yeah, you gotta stomach that pullback. If you held it, you got that next bullish candle that continued to break, still holding the pullback. It's easy to see now, but if you like right now too, it came right into this red box. I tell you, when it comes in these red boxes, you need to make a decision. If you don't, then the red candle comes down and will decide for you. Then you're probably going to close down here where you were up 75 pips and now you're only up 25 pips, and now you're getting scared and you're closing a trade at 25 pips. That's probably happened to a million of us here, where you're holding 75 and then you see that big red candle and then now you're scared you're going to get a break even and it's stopping you out at 25. I'll raise my hand. I've been there. I've done that. I know how it is. I'm sure you have too, but you could have closed out at the high of the candle up there and not play with shoulda, woulda, couldas. That's trading, guys. Okay. Unfortunately, that's how it is. There's going to be different days, different moves, different patterns every single day. But if you have one plan every single day and you stick to it, that will teach you consistency. I've been consistent the last 15 years trading, same with Blair, same with Dave, same with everybody at SST. Why? Because we just stick to one consistent plan. I don't trade, or I don't change my trading plan. I don't change it just because it's FOMC, NFP, if it's PPI, CPI, if it's Asian session, London session, Wall Street open. I do not change the style of my trading. This is how I trade. Top-down analysis, zone to zone, box to box. I scalp 1 and 5 minute candles. And every time it comes to a target, I make a move. And I don't play what it shoulda, couldas. I got out too. I got out a little earlier. I could have been, I should have done that, could have done that. I don't care. When I look at my MT4, I've secured money. I've done my job as a trader. I don't look at what it shoulda, couldas. If that's the case, leave runners. Leave a runner. Chicken wing reversal pattern. You got it. It's not Stock Sniper Trading. Yep, this is the chicken wing reversal pattern. By the way, they closed my Buffalo Wild Wings. I had a Buffalo Wild Wings 5 minutes from my house. We used to always go Thursday nights. Yeah, bro, they closed it. We went there to watch the Miami game, and it was closed since last week.
No shit.
Yeah, they had the best Parmesan oregano boneless wings. Man, they closed Buffalo Wild Wings.
Wait until we get Chick-fil-A.
Yeah, it's coming right near my house too, Blair.
Yeah.
We'll go for the grand opening, okay? No pepperoni pizza, Joshua, unless the pepperoni is halal. No pepperoni pizza here. I don't eat pepperoni. I don't eat pork. We can get halal pips today. These pips, I promise you, are all halal. We prayed for these pips today, all of us, okay? So these pips have blessed us today.
I was a little risky, but I had a feeling I went puts before FOMC.
Oh, you did that? Yeah?
Yeah.
Nice.
Tesla, QQQ.
Yeah, good. Okay, guys, I only have 5 more minutes, and then that's it for me. I got to go pick up my children at school. I'm happy we did this FOMC. I wasn't feeling good. I got fever, but I feel good now, guys. Awesome. I'll let you guys know if I can do the webinar tonight. Maybe we might move it to tomorrow night, but I'll fill you guys in on the announcements in Discord. But yeah, this was a good session, guys. We didn't have crazy volatility like some really whipsaw action that really could have got nasty. It was just a nice push down, found a nice little support area, and kind of you can buy the move coming right back up. And you can watch now going into power hour. There may be a continuation move, squeezing, continuing to drive, or it could pull back into these zones. So just continue using your zone to zone trading, guys. Again, if you've made 1%, 2%, 3%, whatever it is, maybe pocket a certain amount, 80%, just like a trailing stop loss. Put the 80% away. Like for me, example, if I made 100 pips right now and I want to continue trading power hour, maybe 80 of those pips I've secured, and I'm only trading with 20. 20 is my maximum stop loss. If I get stopped out, I'm done. No more trading. I'll end the day with 80 this session. So that's the way how your mentality should be, guys. Make sure. Are we in Miami? No, guys. We're in Ontario, Canada, close to Toronto. I wish I was in Miami. No, we have a tornado watch over here. Blair, are you okay where you are?
Yeah, I had a tornado watch last night, and I slept peacefully. I woke up.
Yeah. Okay, guys, so you see we're coming up again and got rejected. We're going into power hour, so please be careful trading, guys. Blair, thanks for joining, bro. I appreciate you on these calls. I didn't know whenever you're here, I have no idea when you're on here.
Yeah, I just come up whenever I'm free. It's deciding what it wants to do.
Ear 420, no problem, man. Good session. Hopefully you got some pips and you dipped out of the market. Good job, guys. That's what we're here for, to help. Number one, we're an education platform, okay? So we're not a buy and sell signal here, okay? We trade with you, that's a fact, but we provide analysis, we provide education, how to trade these markets. We don't want to be a buy and sell channel, okay? So if you want that, there's millions of people that do that and they do it really good. But here we want to teach you how to trade. We want to teach you how to do this every single day for the rest of your life. And you can do it together with us, okay? I'll be trading the rest of my life. Blair will be too. Dave, PK, everybody here at SST. I can't see us going anywhere. I'll be scalping with you guys when I'm 80, 90, 100 years old, guys. Inshallah, I can get there and I'll be trading with you guys. I just might need someone to hit the buttons for me because I might be a little slower. Who knows what the technology will be back then.
At that point, you'll have AI doing your trading for you.
Yeah, that would be amazing. Just say buy here, or could you imagine AI? I say buy feeler trade, buy standard, buy Lambo, buy, or sell, or just me saying with my voice. That would be incredible, guys. If there's anybody that can create that, hit us up. We would love to create that with you guys. That would be amazing. Or scale out a red box here, 50%, and just me like kind of saying it while it's happening, and you can save the motion of pressing the buttons. That if that could happen, that would be next level trading. Who knows? Maybe that's going to be the technology in the future. Ian, you got a new project? Get back to us. Hit us up. Mark, yeah, we're gonna meet up. I'm coming to Montreal, Canada, maybe in the first or second week of July. So if there's anyone around Montreal, I definitely will go out, take you guys out for dinner and meet everybody. But guys, that's it for me. It's 3 o'clock. This is Power Hour. I got to go grab my kids at school. Thank you guys so much for joining. I appreciate all of you guys. Thank you everyone on Zoom. I appreciate you guys. I'm going to try and get better for all of us. Thanks everyone on YouTube. I appreciate you guys joining. Hopefully you guys pipped and dipped with us today. Make sure you hit the likes. Before you dip out of YouTube, hit the likes, guys. Please, we do... it helps us out a lot. Believe it or not, it does. I don't want to keep saying it, but it helps with the YouTube algorithm. If you see what we're trying to do, we're trying to grow YouTube organically. We want to hit people around the world that really need this financial education that can possibly change your life for free. It's free education, guys. It's good education. So just that's all we ask in return. That's it. Nothing more. Also for the donation, thank you, bro. When you did that, you don't need to do that. I keep that money for yourself. Compound your account with that. We do appreciate it, but that's not necessary. Thank you for doing that, man. That's amazing. So thank you for that. And everybody else, yeah, that was Lisu Darrow. Thank you, bro. I appreciate that. That was respect. Everyone, shout outs to Lisu for that. Do appreciate that. And guys, I'll let you guys know about the webinar later tonight. Maybe we might push it to tomorrow. I'll let you guys know, okay? But thanks, guys. Captain, thank you, bro. Appreciate you too. Blair, thanks for joining. Guys, if you guys are continuing to trade, yes, Dave, I know my kids are waiting. I got to get out of here, bro. And I'll see you guys later on. Hopefully you guys enjoyed FOMC. There's going to be more of these. Remember, 8 times per year. Well, but if you can now, at the end of the day, go back on YouTube and watch Powell. Watch the conference. Watch what he says. Watch his forward guidance. Watch what he's saying. Maybe you might have an insight of how the markets are going to trade tomorrow or Friday or going into maybe the next following FOMC. Make sure you watch that, guys, to see what they're saying. Listen to Uncle Powell as well. See what he's doing and things like that, guys. Hopefully you guys had a good session. Thanks, guys. I'm out. Blair, thanks for joining, bro.
Yep. See you, buddy.
Thank you, guys. Take care, everyone. Have a good day. Thank you. God bless everyone.
Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HOMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.